Hi everyone, welcome back to my channel. This is my usual weekly technical analysis outlook videos in which I will comment on what I think will happen to some FX crosses and equities. As always, before I begin, I want to clarify that this is not a solicitation or recommendation to enter into long or short positions in the names that I will mention in this video, nor do I have existing positions in them. This is not financial advice, and if you're using this content as a guide to trade, you are doing so at your own risk. Alright, let's start. These are the names that I have covered in past videos, and I will do a quick review on each of them. In the later section of this video, I will also begin covering these new names. I will also be ceasing coverage on several names as well. Do check them out towards the end of this video. I've put in timestamps, so please use them to skip to the names that interest you. In the video on the 16th of August, I said that Nissin Foods has reached about 91% of the textbook target of its head and shoulders top. I maintained coverage on this name just to see if it could fall closer to 2539.5. Last week, Nissin fell to a low of here 2628, reaching about 93% of its textbook target. I believe this head and shoulders top is successful and will no longer take guidance from it because I suspect Nissin to be forming a bullish pattern, a falling wedge. Now this falling wedge requires a breakout above the resistance trend line on a weekly basis, since this is a weekly chart, to complete, and once completed, or rather if completed, it suggests a move of around 641 yen. Alternatively, if it breaks below the support trend line, then this bullish pattern will be invalidated. In my last coverage of dollar-yen on the 11th of October, I said that it should go lower first due to two reasons. There was an overextension above the upper Bollinger, and also to fill the gap up of the 6th of October. I was both right and wrong. Dollar-yen did go lower but did not fill the gap, which is why I stress that gaps are usually but not always filled. The game changer was the bounce over here of the 20-day simple moving average, one that formed a downside exhaustion candlestick. With dollar-yen now trading back above the neckline, it is in the bullish resumption phase of its cup and handle bottom that has a textbook target at 157.41. Moving over to Kiwi dollar, the falling wedge that I identified in a video on the 18th of October was completed over here on the 20th of October. This bullish pattern has a textbook target at 0.5914. I am now technically bullish on Kiwi dollar, but note that this rejection over here at the 20-day simple moving average could trigger the start of the correction phase. At the risk of sounding like a broken recorder, chart patterns usually occur in three phases. Kiwi dollar had the completion phase over here. Then the next phase is likely to be the correction phase, during which price action falls. And then comes the bullish resumption phase after price action bounces off certain supports. There will be two new coverages in this video. First up is Adobe. This name has fallen from the last high in March 2024. But downside appears to have found a bottom around 332.01 since April. The latest price action, the rebound, suggests that Adobe has successfully bounced off this support. I suspect Adobe to be forming a descending triangle, which is a neutral pattern. The outlook will be determined by the direction of the break. If Adobe closes above the resistance trend line on a weekly basis, then I will be technically bullish on it. But if there is a weekly close below 332.01, then it confirms a bearish case. Either way, this descending triangle suggests a move of around 112.96. Home Depot appears to be forming a head and shoulders top on the weekly chart. This bearish pattern requires a weekly close below 327.43 to complete. But let's take a closer look at the recent price action. Home Depot is quite resilient, bouncing off the Ichimoku cloud 3 times, though this week it closed below the 20-week simple moving average. It is not conclusive, but downside bias has not prevailed just yet. Closing below the cloud will suggest further downside. Alternatively, rising above 426.75 will invalidate this bearish pattern. Moving on to names that I will no longer be covering in future videos, I will now cease coverage on Shell PLC. I identified the formation of a head and shoulders top, but this bearish pattern is now invalid after over here price action broke above 2,843 this week. I will also cease coverage on Alphabet. The cup and handle top that I deemed completed in the previous video was eventually invalidated over here when Alphabet rose above 251.32. I realize I have not covered dollar ringgit since the 4th of August due to my oversight. I will now cease coverage on dollar ringgit because the descending triangle was invalidated over here when price action closed below the support on the 17th of September. Even though it has rebounded, I think it's best to just follow the rules and cease coverage on this. I also overlooked Kiwi Swiss. In the video on the 13th of September, I turned technically bullish on Kiwi Swiss due to the completion of a falling wedge. This turned out to be incorrect because Kiwi Swiss eventually fell further and has since invalidated this bullish pattern by breaking below the support trend line. I will now cease coverage on Kiwi Swiss. Finally, dollar Korean won has reached 100% of the textbook target of the double bottom at 1,434.43 and exceeded it even. There is likely still more room for upside, but with a target reached and the bullish pattern resolved, I will now cease coverage on dollar Korean won. That's the end of my sharing. I will give updates to these crosses and names only when there are meaningful development, and in the next video, it will highly likely be on new crosses and new names. If you like what I'm doing, please help me out by giving me a like, please subscribe and hit the notification button for more videos like this.